Sometimes VA loans have to go through a process known as manual underwriting. This is a method used when a lender is not able to get an automated underwriting approval, and it's similar to how loans were approved before computers were used. So in this video, I'm going to give you everything you need to know to increase your chances of getting approved. Keep in mind, some lenders don't allow manual underwriting, so make sure that you find one that does. First, let's start with credit. Now, VA does not have a minimum credit score requirement. Some lenders may require a minimum credit score, but VA does not. If your credit report is blank, that might be okay too. The most important thing an underwriter looks at is the last 12 months. So if everything's been on time in the last 12 months, you've got a great shot at getting approved. There are some exceptions to this rule. Number one, if you've had medical collections, those will be ignored. So you could have had a medical collection show up a few months ago and still be okay. Number two is if you had an old collection that was just reported as a new collection and you can document that it is in fact older than 12 months. Number three is if a late payment happened and you had a good reason, you might still have a great shot. Maybe you were in the hospital and forgot to make that payment, or you had a family emergency. I can't list every reason here, but it would have to be something that was beyond your control, and you can document that it did in fact happen. The 12-month rule changes slightly if you had a bankruptcy or foreclosure. With those, there's typically a 2-year waiting period. However, if you had an extenuating circumstance such as loss of a job and you've reestablished clean credit for 12 months, you may be able to get approved after 1 year. Now, you will be required to write a letter of explanation explaining any derogatory items that are on your credit. You don't have to explain medical collections due to medical privacy laws, but you will have to explain any other collections that show on your credit, as well as any late payments that happened in the most recent 24 months. So in my experience, most of these are usually caused by a loss of income or an unexpected expense. Explain what happened that caused the late payment or collection and supply documentation to back up the story. Keep the explanation short. An underwriter doesn't want to read a novel. Lastly, you'll be required to document that you've paid rent on time for the last 24 months. The lender can send a form to your landlord, or you may also provide canceled checks. So now let's look at debt to income ratio requirements. This is the ratio that compares your total monthly expenses to your total monthly income. So if you have an income of $6,000 per month, the total debt including the new mortgage is $3,000 per month, you have a debt ratio of 50%. Now, most lenders prefer to stay around a 45% debt to income ratio when approving a VA loan that is manually underwritten. Some lenders will allow you to go higher if you have good compensating factors and enough residual income. So residual income is basically how much you have left over after paying income tax, any loans, the new mortgage, and utilities for the new home. We won't get into how that's calculated in this video, but VA does have a requirement for how much must be left over depending on the state you're buying in and your family size. Now that you know all about credit and debt ratio requirements, there is one last piece that can make or break your approval, and that is compensating factors. You see, the underwriters have to justify to VA why they made the decision they did. These compensating factors are what makes them feel warm and fuzzy. There's a list of these in the VA guidelines, but here are some of the most commonly used. High residual income. If VA says you need $500 a month and you have $1,000, you'll have double what's required. Significant liquid assets. So this can be savings, retirement accounts, or any other account that you can pull from if you were to get into a bind. If the estimated mortgage payment is $1,500 and you have $20,000 in a 401k, this can be huge. Little to no increase in housing expense. This means you've been paying $1,500 in rent and now your new mortgage is $1,600. So remember guys, if you're needing a manual underwrite, make sure you're working with a lender that knows it well. Unfortunately, many lenders don't know this process and deny VA loans that should be approved. If this video helped you, please help me by hitting the thumbs up so YouTube will show this to other people. We don't want any VA loans out there getting denied that could be approved, and you can help by hitting that like button. Thanks so much for watching.